and welcome to Your Stocks in the Mumbai News Studio. I'm Ekta Batra. Well, it's turning out to be a session where we are sitting at record highs for the Nifty, but the mid-cap index has given up its gains from the top, so it's completely flattened out, and the Bank Nifty just about consolidates with a little bit of a negative bias. We have with us Rajat Bose joining in on the technical, Sharad Avasthi on the fundamentals to answer all of your queries. Rajat as well as Sharad, welcome to the show. Well, I'll start with you, Rajat. I just wanted your sense in terms of how you're approaching today's trading session, the fact that, it's just about consolidating but at record highs.
Good afternoon, Ekta. Good afternoon to all your viewers and as well as Sharad. Thank you for having me on the show. What I would say is that, yes, a little earlier, the high made was 25,115.50. This is the level that I indicated in my market outlook that I sent to my clients as well as some of your colleagues. That this will be the critical level, that is 115. If it is taken out decisively, then 25,300 and thereafter 25,500 or 25,495 to be precise. These would be the targets. As of now, what we are seeing is that a steady move up. Although I expected today that there would be some profit taking, but since that profit taking is not happening, chances are that we would see higher levels. But for that, 25,115 needs to be decisively taken care of. Regarding the Bank Nifty, it wobbles. I mean, it is still on a good wicket in the sense that it is above 51,100, but it needs to take out 51,400 to about 51,500. After that, the next target would be somewhere around 51,900. A precise target for Bank Nifty, I'm not giving because above 51,000, you don't need to give precise targets. Roughly 51,900 should be the target if it manages to get past 51,400. That's the thing. And on the downside, if it falls below 50,900, then 50,300 might well be seen going forward. Bank Nifty decisively, it is not showing any decisive move as such.
Okay, all right. Bank Nifty not showing any kind of decisive move, but for if it drops below 50,900, then it can probably test 50,300. That's the word coming in on the technicals. We do have a couple of queries now, so let's get to that. We have PC Achaya, who writes to us from Pune, holds 25 shares of Havells, which is bought at around 1,222 odd rupees. So he's currently sitting on a good profit there. He wants to know the future prospects of his holding. Well, interestingly, we just had a chat on Havells just a couple of minutes ago, Sharad. BNP Paribas says it's their preferred pick as they expect a pickup in the real estate-led demand to probably aid in terms of numbers for them. What's your sense in terms of Havells? Do you think that there's further upside, or should one take profits?
I think at current prices, it's better to take some profits off the table. Though I do think that the electronic business or the consumer durable business is in a sweet spot for the very long term. And considering the urbanization trend that we have, I think a lot of new people will get added to that list, will be new buyers into the list. And Havells has been expanding their product portfolio. So I think, yeah, long term, it could be a good bet, 3-4 years. But if you are looking at 18 to 24 months, I think most of the positives are possibly discounted in the numbers. I would rather wait for some disappointment to come in where I could get a chance to maybe buy it lower. But at these prices, it's already trading at 50, 55 times forward. I don't think it offers much scope of a move from here onwards. So at current prices, I would recommend an exit, and maybe you get it, 10 to 15% lower. That's where you should start accumulating the stock.
Okay, all right. So that's on Havells. But on the technicals, how would you approach the stock, Rajat?
I would say since early June, this is a range-bound counter. On the downside, something around, say, 1,800 or 1,750 kind of levels. And on the upside, it is 19. It is about 1,960 to about 1,985. That is the all-time high, or at least the yearly high. And this is showing majorly a range-bound activity. It is a trader's delight, but not an investor's stock at the moment. Once it crosses 2000 decisively, the kind of things that this institution is talking about, that might pan out. But for now, I would agree with Sharad that here one should actually book some profits and re-enter once again between, say, 1800 or 1750. That would be a better idea. And once it falls below 1836, where the 200-day exponential moving average, the 50-day exponential moving average is located, it is going to go down sharply. And then you would get those levels to re-enter, that is 1800 to about 1760.
Okay, all right. So that's on Havells. But now we have another query. We have Deepak, who writes to us from Bihar with an investment question. He's asking if we can buy BPCL at current levels for the longer term. So that stock has already given good returns. Sharad, it's up around 55% this year. Do you think that this is a good long-term bet, a portfolio stock that one should buy at these levels?
No, I think a major part of the rally is over. These stocks largely were trading at 3-4 times, so they presented a very big opportunity of improving from those levels. Right now, if you look at the numbers, the next 2 years, these companies are expected to report flat to marginally positive earnings, and they should ideally report something in the range of 35 to 40 rupees. And I think for companies that will not grow at a very rapid clip over the next 2-3 years, for them to get more than these valuations, right now the fascination is there because of the capex, etc., that they are doing on a regular basis. And I think oil prices would remain benign, that would help them. But in spite of that, I think numbers would more or less be stable to range bound for most of these companies for the next 2-3 years. And considering that fact, I think them trading at around 9 to 10 are peak multiples. Optimistically, another 10% maybe, but I don't think at these prices it makes sense to buy into these stocks for the long term.
Okay, and what about you on the technicals, Rajat? How would you approach BPCL? Stock has given modest returns of around 6-7% in the past 3 months, but year to date it's done well.
See, around say October last year, around 23rd of October, it made a low of 165, and from there it went up to something very close to a level of 350, then came down to 280, and it has been moving in a range-bound situation. This pattern that is developing in BPCL is somewhat, if you have seen SRF or Asian Paints, they went up. They did very well. 3,500 for, say, Asian Paints and 2,800 for SRF. And they went on to be range-bound counters for the next 3-4 years in case of Asian Paints, and in case of SRF, it has been like that for the last couple of years. Similar situation is going to pan out for BPCL. At current levels, I would suggest a sell and re-enter. If you want to buy 300, 280, you will get that price. And that is how it should be played. You can't see that another rise up from here. It's very, very difficult for that to happen, because the chart setup is suggesting some people are constantly selling at higher levels.
Okay, some people are constantly selling at higher levels. Well, we do have KGC Prakash, who writes to us from Mumbai now. He holds 70 shares of Galaxy Surfactants, which he's bought at around 2,800 odd rupees. So he's sitting on a profit there. He's asking whether he should hold or sell this particular stock. Well, in terms of the fundamentals, there's a hope that, there could be a recovery in the chemical sector. But what would your approach be towards this counter, Sharad?
We have a coverage on this stock, and we are recommending a hold for targets of around 3,150, 3,200 based on FY26 numbers. The positive side is that, as you rightly mentioned, that most probably the destocking phase is more or less over internationally, so that could help them. A bit of raw material price movement could hinder the margins in the extreme short term, because last month also some price movements have been adverse to the company. But beyond that, we think that the company is regularly doing capex as a dominant positioning in most of the products they make. And gradually, I think over the next 2 years, we are expecting around 10 to 12% kind of CAGR in the top line, and a 15% to 16% kind of top CAGR in the bottom line. and trading at around 27x, I think the fair value should be around 3150, 3200. So I think one can continue to hold.
Okay, all right. And what about the technicals? Rajat, how would you be placed on the stock?
It's, it's actually 3200 level is par for the course. Anytime that level can be seen, because it is again a range bound counter. Now this time the range is slightly bigger in the sense that 2500 to about 3200 should be the range for this counter. And around 3200, I would suggest one can at least book part profits, even if the chemical sector does well. It may take a little more time to give a breakout above the all-time highs around 3400. So one can trade accordingly. This is basically a range-bound counter, and you should be doing at higher levels sell, and at lower levels close to the support, you can buy again.
Okay, all right. Now we have Riju Srivastav, who writes to us from Pune, holds 25 shares of Zomato, which is bought at around 55 odd rupees, wants to know the future prospects of her holding. Well, Zomato is rapidly expanding, and then obviously we have the upside coming in from Blinkit. So it's really become a stock, which could be probably a portfolio stock at some point, according to some. But Sharad, what's your sense on Zomato? Do you think that one should probably hold on to their buy price in Zomato, and what is the upside that you see from here on?
I've not been very bullish on Zomato for quite some time. And even now, I think, though the businesses they are doing, even Blinkit or the main Zomato business, both are very good businesses. But if you look at the numbers, I think now at these prices, most of the positives are priced in. Even if, the forward numbers are re-rated by 100% over the next 2-3 years, even then you'd be looking at what an earning of somewhere around 7-8 rupees. So I don't think there's much scope for appreciation at these prices. Even in EV to sales CAD terms, I think most of the positives are already priced in the price. Though, as long as the company does keep reporting outperformance in terms of numbers, that's a new fact that any company that keeps reporting quarterly numbers better than expected, the re-rating continues irrespective of what valuations you're trading at. But I think Zomato at current prices, I would be very skeptic about how much more returns it can generate. But in the past, it has done very well. But at these prices, I think it's better avoided. I would not be very happy buying something like a Zomato at these prices.
Okay. And Rajat, what about you?
First, caveat from my side, I personally hold Zomato in my portfolio. But here, I must say that I quite agree with Sharad. That is, from here, see, a stock that was 18 months back was at 46, and today it is almost 6 times of that. And 278, 280 is a major resistance for Zomato. Unless it is taken out decisively, the next target of around 300, 320 or 25, that is unlikely to come. And the rise has been parabolic. And if you are not a very long-term investor, then you would do better to book profits. And even if you are a long-term investor, you should sell partly here, because it will take some time. This kind of a one-way traffic, one-way ticket to the moon just doesn't happen for a very long period in the stock market.
Okay, all right. Well, on that note, we have a lot more queries lined up, but we need to take a break with the news that the markets, in fact, there's a lot of interest which is coming towards the frontliners today. So that seems to be where the interest is playing out, because we have the Nifty, which is at the high point of the day now. So up around 104 odd points currently for the Nifty, but the mid-cap index is just about going to break into the red as we speak, so just about higher by around 25 odd points. Bank Nifty also seeing some buying at lower levels, so it's probably going to break into the green, while the mid-cap index probably will break into the red, or just about holding in the green with the skin of its teeth. We'll take a break, answer more queries on the other side. Stay tuned. Welcome back. Well, we still have a couple of queries to go through, but before that, just want to point out a couple of stocks which are gaining. LTI Mindtree is in focus on account of positive brokerage note. That stock is up around 6.8%. But Divi's Labs is showing some amount of traction, so that stock is up around 3.7%. It's raced ahead. In fact, that stock has given good returns this year. It's up around 30% this year for Divi's Labs, doing well at this moment in time. We have Wipro, IndusInd Bank, Bharti Airtel, all of these stocks which are managing to see buying on the upside, so up anywhere between 2.5% to 5%. We do have Rajat, Bose and Sharad Avasthi to still answer all of your queries. Before we move ahead, just wanted your thoughts on the entire IT space, which is showing a lot of upside today. Rajat, would you be a buyer on a couple of these?
One thing is that engineering R&D stocks are doing pretty well, like LTTS, which I personally hold in my portfolio. It's now 200 point up. It is still showing a lot of traction. It can still move up. Apart from that, LTI Mindtree and Divi's Labs are two stocks that have been thrown out of the Nifty index. I've seen one thing, that whenever stocks are thrown out of an index, which is actually the lead index, they tend to move up. And that is what is happening in these two. But LTI Mindtree, as it is, would have been very good. Apart from that, persistent, only KPIT, I'm not so positive. But another stock in the engineering R&D software, Tata Technologies, you should look at, because that is rising from the bottom. So there is a lot of money to be made there, provided you are willing to be there in the stock for some time.
Okay, all right. Well, we do have Sohail now, who writes to us from Meerut, holds 46 shares of Jyoti CNC at 1,063. Wants to know whether to stay invested or to book his profits at these levels. So he's asking on Hindalco at this, or he holds 46 shares of Jyoti CNC. So maybe that stock should come up for you. Yes. So just about sitting on a profit at this point in time. Would you have a view, Sharad?
Yeah, I think it's fairly to fully valued at current prices, though the CNC space as such should grow at a very rapid rate. Their presence into, electric vehicles, as well as possibly in the future semiconductor manufacturing capacities coming up in the country, could help them. They have a capex from around 4,500 to 6,000, and that should also help them. The capacity utilization ramp up should also happen. Probably they're trading it. They are having a capacity utilization somewhere around 55-60% right now. The order book is good, so I think forward growth should be very good. But even if you consider optimal growth, I think maybe the earnings, triples from here and goes up to say somewhere around 30, 35. Even then, I think trading at 40, 45 times, I would be better off buying some of the frontline names rather than something like a Jyoti CNC, which is ancillary to, aerospace, defense, and possibly EVs and semiconductors. So I think at these valuations, I think most of the positives are already priced in. So I don't think it makes sense to continue to hold at current prices.
Okay. And on the technicals, Rajat?
See, it has just crossed some of the moving averages, like 20-day, 9-day, even 50-day has also been crossed. But then it has moved up for the last 5 sessions. And this is now showing some kind of a break happening on its course. So I would suggest that here or slightly higher, one should book profits, because this is the pullback rally to the earlier high, which is around 1,400. If it manages to go there, great. Also book profits. If otherwise, do this thing that at least what the professionals do. You sell here, and as it moves up towards 1,400, sell again, because it will now become a range-bound counter and spend times in between, say, 1,100 and 1,400 for quite some time. So you choose some other stock, just as Sharad was suggesting, that there are better opportunities elsewhere.
Okay, all right. Well, we do have, now we have KS Rao, who writes to us from Andhra Pradesh, holds 150 shares of Hindalco, which is bought at 150. He wants to know the future prospects of his investment. He's sitting on a good profit on this one. Rajat, what would your call be?
Well, regarding Hindalco, it is actually trying to get past the resistance around 700 levels. If it manages to do that, next target would be 720 to about 725. But around those levels, again, some resistance will come and there will be some supply. But if one is a long-term investor, a base metal stock, one can continue to hold.
Okay, all right, Rajat as well as Sharad. Well, on that note, we need to wrap up on the show. Thanks very much for joining in, taking us through all of those queries. That's all the time that we have on the show. But do remember to email us your questions. We'll address them with our experts. Closing bell up next.